Oh, what's up, everybody? Good morning, good morning, good morning. Man, all I can say is what a difference 24 hours makes. Am I right or am I right? Right? I mean, at this time yesterday, I don't want to say panic is a strong word, but we were definitely like laser focused on what was happening. And then a wicked bounce. So is today turnaround Tuesday? That's the question I have for you. I don't have the answer. But we got a lot going on between just the bounce in the markets and some like absolutely insane earnings moves today. I was just talking to Steve. Maybe it is not the best time to have bad news. If you have bad news and you're like a CEO, maybe just like sit on that news for like as long as you can, right? Because they are killing you out there if you got bad news. So we'll talk about some earnings. I want to discuss Google as well. That was some pretty big headline yesterday, the antitrust stuff. We'll talk about that. We'll have Kenny on the show. We'll have Todd Sohn on the show. I hope Patrick joins us, and that's the plan. So smash the like. Let's go. The morning show.
All right. I'm gonna brag just to get going. Can I brag? Ready for this? You ready
You
for
do
this?
every day, so sure.
This is so good. This is so good. I saw the Abe Lincoln of rock and roll, right? This is Slash. I saw him.
I was wondering who it was. Okay.
Saw him playing the blues, right? Because he's touring with a blues band, right? So seeing one of the greatest guitarists of all time playing the blues on the day that the VIX tripled. By the way, at Bethlehem Steel of all places, right?
That's pretty cool.
So I just want to give a shout out to Bethlehem Steel for making terrible decisions and blowing themselves up so that it is now an arts and music center. So I got to see Jerry Seinfeld the other day. Dude, I saw Slash yesterday. Fourth row, $31.
So from what
$31.
I understand, this is like one of the best guitarists ever. This is the guitarist from the Guns N' Roses.
Yeah, Guns N' Roses. Yeah. Fami's best friends with his drummer. So when my wife and I first started dating, me, Fami, my wife, we were at every Guns N' Roses and Slash concert, because of Fami.
All right, good stuff, JC.
It was amazing. It was amazing. Shout out Slash. Shout out Bethlehem Steel. Thanks for screwing that up.
I am definitely still wearing bull market shirts. Yeah. That won't change.
Well, because it's a bull market.
Yeah, look, we'll see, right? We'll see.
Right. None of us actually know whether it is or whether it isn't, but I'm not seeing any evidence that this is not a bull market, so I guess we'll see, right? Like Strazza said, we'll see. I got some stuff to talk about. What do you say, Mr. Israel, now that I'm done bragging about my my show experience last night, which was excellent. The best $31 I've ever spent in my entire life. Fact.
Today, $31 gets you a lot of Jumia shares, JC. Anyway.
All right. All right, ladies and gentlemen, much different day this morning than it was yesterday. Yesterday, we had the VIX literally tripling. Literally tripling. Every time I look at the VIX yesterday, it was higher. Like 160%, 170%. And we don't quote the VIX usually ever, yet alone.
I was going to say ever.
Terms, right? So I thought that was funny. Okay, let's start with the VIX today. The VIX down to 32, if you can believe that. The VIX has literally gotten cut in half. You've got S&P 500 futures up almost 0.5% this morning, up 20 points. 52.36, hanging in there just fine. Dow futures up 150 points, 39,000. You got NASDAQ futures up almost 0.5%, up 72 points, 18,000 and change. Bonds are down. Bonds are down 0.5% on the 30-year bond futures. Crude oil held in there pretty well. Go ahead.
That's exactly it, though, right? It's the bond market finally chilled the hell out.
The stock market likes it when the bond market chills the hell out. That is a fact. We do know that. Crude oil not doing much. Pretty much flat on the day, 72.5. Copper flat on the day, just under 4. Gold flat on the day, 24.5. Silver down 1%, slightly under 27. And then over in the funny money, big bounces across the board. Bitcoin up another 1,000 points, 55,000 for the BTC. You've got Ethereum up a little bit over 1%. That's 27 points to the upside. Right around 24.50 for Ethereum. That got absolutely clobbered. Solana 140 up 7% on the day. Binance, what a hot piece of garbage that thing is. When are we going to stop quoting Binance? 477 for Binance, up 3% on the day. Total crypto market cap, Spencer Israel, 1.9 trillion.
Right.
With the Bitcoin dominance, just under 57%.
Speaking of Solana, Todd Sohn said he wanted to discuss like a Solana meme coin, and I had no clue what he was talking about. So Todd might be up on the meme coins.
There's a lot of Solana meme coins.
I know, but he named one, and I don't know what you're talking about.
You don't know the name?
Do I know the name?
I'm familiar with these, you know.
Yeah. Anyway, we'll bring it up with Todd. Anyway,
we'll bring it up with Todd. All right, yeah. Strazza. Throw up. We already talked about what stands out in the futures, but why don't you throw up the VIX and Strazza? Why don't you tell me what you thought stood out from yesterday?
Nothing. Every sector and every industry group was red except for the one that's been down the most over the trailing 21 days. So you did get some sort of dead cat.
Which was
semiconductor equipment, right? The ones that have been hit the worst bounced the best yesterday. Classic dead cat stuff. And you got a really nice rally in the morning that puttered out around 1 o'clock and faded pretty much into the entire afternoon. So we'll see. You need follow through today. It looks okay for now, but sellers are in control. And until they stop being in control of the tape, I think you want to be careful here.
Can I tell a story?
Please.
So the day that Bear Stearns went under, the opening print of that day was the low. And then the market absolutely ripped from there. And I know this because I thought that I was so smart in 2008. I was the next Warren Buffett. I don't know if you heard. In my head, I was the next Warren Buffett. And Stephen Cohen like combined, and Paul Tudor Jones combined into one. That's who I thought I was. Definitely. Because I was short financials, very aggressively so going into the blow up of Bear Stearns. So I'm thinking I'm the man. I am the man. So I was in Miami when Bear Stearns blew up, and I flew in to New York City, and I was in the taxi. And this is 2008. This is before internet was as readily available as it is today. We used to have these little like devices. They were like these little Verizon cards or whatever. Mm-hmm. And I was going into the Lincoln Tunnel, and the cab driver, I made him pull over literally in that traffic going into the Lincoln Tunnel because I didn't want to lose service because I was literally covering all my shorts, and they were leveraged ETFs at the time. So I was selling those leveraged ETFs, and I didn't want to go into the thing. So I remember vividly. So I got rid of everything. I'm 100% in cash. I am the man. I go through the Lincoln Tunnel. I get to the office. I put my stuff down. I look, and these markets are ripping. I don't own shit. Right. So within like a split of a second, I go from thinking that I am the greatest trader of all time to being truly humbled. Because if I truly was, I would have flipped all those shorts and gotten long. Right. So I remember very vividly what was happening. I literally was working across the street from Bear Stearns at the time on Park Avenue and 46. The lesson there, the opening print was the low. Is that what we saw yesterday, Strazza?
I have no idea. We'll wait and see. All I do know is that
a little familiar. It didn't rip quite. First of all, it didn't rip yesterday quite as much as it did after the Bear Stearns blow up, and we got hell of follow through after that Bear Stearns blow up, and we haven't quite seen that yet.
I wonder what we'll call this looking back, right? Like the VIX chart, you just have it marked Monday.
Oh yeah.
So it's Japan's.
Throw that back up.
Can you imagine being so bad as a central bank that the rest of the world has interest rates, 2, 3, 4, 5, 10%, and you're still at zero? It's all they're doing. Everybody is pointing the finger and getting mad at the Fed here and the politics here. This is Bank of Japan.
What I'm wondering is, was this it clearly was a surprise policy move?
Yeah.
Right. But why? Like, the Fed goes so out of their way to not surprise us.
Let's
To
talk.
You've got these leveraged funds out there in Japan that are blowing up, and they got to sell other stuff.
And it's more than
that's a domino effect, and then it causes other funds to blow up, and they got to sell other stuff, and that all happens at the same time.
It's worse than that, right? The rest of the world is getting ready to cut rates.
Forget that shit. I don't care. I don't care about your interest rates, Strazza. I'm talking about purely what's happening from the market itself.
This is because of interest rates. What's going on?
Yeah, maybe. But the point is what that causes the domino effect. The leveraged fund in Japan blows up. Forced selling happens, which causes more funds to blow up, which causes more forced selling. So you might be right. It might have been because of shitty policy decisions. Shocking from Japan. I can't believe it. You might be right. That might be true. In fact, you probably are right. But my point is, what is actually happening in the market is that domino effect. You feel me? That might have been the first domino.
Yeah, you're talking about the carry trade, people who were levered up in the carry trade. And then they got this, which was an absolute shock, like you said. But again, it's because the rest of the world is getting ready to cut and move rates lower. Japan can't even do that. They're at zero. Like what are they even doing over there? What a joke. The central bank has really blown it. So then what happens is people have to then sell dollars, buy yen, and unwind that trade, right? And get out of treasuries. So that's what the pressure that you're seeing on our bond market too.
Every time they say yen carry, you take a swig of tequila. All right. That's the remember Pee Wee Herman? They would have like the word of the day, and every time somebody said that word, they'd be like, "Ah!" Right? That's yen carry trade now.
Steve, I want to give you.
Not remember Pee Wee Herman?
No, Steve, I want to give you your flowers for the comment yesterday that really stuck with me and was right, which is that the best days usually come around the worst days, right?
This isn't that good.
Yeah,
not usually.
Like
every time,
always fine. So the Nikkei just had its fifth best day ever.
They were just down 15%. They better, right? Like that's if you go back to any volatile moment in any market, you get just massive rips off of crazy sell-offs.
Go to the
JC. I can't help but think. I know it's still early. Are you not looking at the price action today? Like that's it.
Yeah, it's like a California pizza. You know how like a California pizza, like you get it and then it just flops and all the cheese comes off, right? You need a stiff one, like in New York City. You can fold it, you eat it, right? In California, you get a slice of pizza and it's like that's like this morning's market, like limp deck, Okay.
So I want to just address some of the comments in the chat about my newfound bearishness. Here's the thing, guys, right? It's been a great bull market. If you've been paying attention, you made lots of money. Fantastic.
I think it still is.
Right. No. Again, we don't know if we've seen the highs for this cycle or not. Anybody who tells you that they know, it's fucking crazy. Run from them. We don't know if the markets have topped and this is it. We have no idea. We can't tell right now. We can only know.
By the way, we also didn't know 2 years ago that was the bear market bottom also.
What we do know, that's right. What we do know is that risks are elevated right now. Okay, the risk reward equation today is not as good as it was 3 or 4 weeks ago. Volatility is heightened in a big way. There's tactical damage across the board to trends.
It's only at 30.
So we do know that. And we also know that in the event that we're wrong, we could pick our spots, mark levels on charts, drop VWAPs, whatever, and get back in. But when the markets get a little wild like this and things stop making sense to me, I shift from get money mode to keep money mode. And that's simply the prudent thing to do. So
I want to address something. Throw up slide 3.
Yeah.
So I'm on the phone with Strazza yesterday, and he's like, JC, we can't just go from being short-term traders to being long-term traders when it's convenient.
You're moving the goalpost again. Can't do that.
That's what he's telling me.
No.
So let me just remind everybody, including Steve Strazza, who tends to be very forgetful, that the advantage here that we have as market participants is that we have multiple time frames. We have multiple strategies with different portfolios that are designed to do different things, you see. So many investors, most investors, almost every investor, if you've been investing long enough, has long-term portfolio stuff that has nothing to do with what the market did yesterday, the day before, or the day before, right? Steve Strazza, to be clear, approaches this in a different way than me. Steve Strazza trades individual securities in his retirement accounts, in his tax-deferred accounts. I do not, right? I it's not the S&P 500, but it might as well be. It might as well. It's essentially the S&P, right? For my Pennsylvania college fund situation, it's not the S&P, but it basically is, right? The stuff that I'm doing in the long-term portfolios, retirement, all that stuff, I'm not trading individual securities. It just goes into a S&P 500 essential vehicle. So in a day like yesterday, I wanted to reiterate to everybody how I think about that sort of thing. And a lot of investors put money away every single month in those types of accounts, as do I. Something I learned a long time ago, because I've seen the math, is that whenever the S&P 500 is down 8% in a month, right? And that's just my number, 8% in a month, I put twice as much money in that account on that given month. So when we were like, oh, now's not the time to allocate for certain strategies like those retirement accounts, I think it's a great strategy to put twice as much money, right? Because the beauty of putting money away every month is that you're going to buy the top. You're also going to buy the bottom, and you're going to buy everything in between, right? It's really the compound interest that you're looking for. And Strazza and I just approach it in different ways. Strazza likes companies that he really loves, and he puts those away, right? I don't do that. I look at individual securities for more tactical accounts, right? For our other strategies, right? So I wanted to talk about that because I think that's a really important concept. You feel me on that, Spencer?
Yeah, I mean, it totally makes sense to. You have to kind of juggle multiple balls in the air, right?
Yeah.
You have to wear multiple hats, and you have to really try not to let one hat, I guess, impact the other one, right?
And maybe it's
It's
down
hard.
6% month or a down 10% month, whatever it is. It doesn't matter. For me, it's 8. That's just the way that I learned it. That's just a simple math. I mean, it's very simple. Here's so I wanted to get that out of the way. Slide 3. An interesting thing is the lack of new lows, right? Lack of new lows. So there were hardly any 52-week lows at all yesterday, considering the VIX tripled overnight for the first time in world history.
It was one day. It was one day.
Yeah, but the VIX tripled, bro. Like, my wife is like, are you being dramatic? Is it really a big deal in the market? I'm like, Morgan, the VIX literally tripled overnight. It's never happened before. So yeah, it's a big deal. My wife thinks I'm dramatic, Strazza.
They're coming from a high level. And here's the thing. The shit that would have been hitting 52-week lows on a sell-off like this was the same shit that ripped 3 weeks ago and has been ripping. So they're still off 52-week lows. Yeah. Like, go look at a Zoom even.
By the way, chilling on a rainbow. JC sounds like Michael Saylor buying the dip forever. Yes. In accounts that I'm not going to touch for 35 years. Yes, I'm buying the dip forever. Yeah, that's exactly right. In those accounts, right? Which are, by the way, are much smaller, unfortunately, than my other accounts, right? But yeah, that's the strategy. You buy the dip forever. Yeah.
In 2022, I talked about this a lot. And I would bring up the retirement account, and this is a long-term buy a lot. So I think there's different times when you want to be more active for stuff like that than others. And like you said, you have your process for it. I kind of have mine. And that's it. But I think in terms of investing for this cycle, which is what I'm usually talking about, we're talking about trading options, buying this stock, buying that stock. That's what I'm referring to now. I don't know if this cycle is over. It's been good. If this is it, great, fantastic, right? We could wait for the next one.
Would you have expected more new lows?
Taking a little bit of exposure off, increasing cash positions right now makes sense. It gives me more flexibility. That's all. What?
Are you surprised? Granted, the new 52-week last month we had more new 52-week highs on the New York Stock Exchange and the Nasdaq, for that matter, than at any point this entire bull market, right?
Yeah.
So due to that fact, it's hard to make new 52-week lows if so many stocks are making new 52-week highs. It's just really far away from new 52-week lows. So that's just math. I would have so the fact that we didn't get any new 52-week lows, that's not that surprising. What is surprising to me is the lack of 3-month lows, 1-month lows, nothing. I would have expected so much more. You're telling me the VIX is tripling?
Dude.
Things are crashing overnight. Biggest Nikkei crash since 1987. Our pets' heads are falling off. I would have expected more new lows.
I think it makes complete and total sense in the context of the breadth thrusts that we had a few weeks ago. A few weeks ago, all of the stocks, not just the best stocks, were raging higher, right? So if you would have asked me 3 weeks ago, what are the ones that'll probably show up on the new 52-week lows list? I'm going to tell you real estate, Maybe some of the ARC stocks, the real speculative growth stuff, maybe the biotechs, right? All of those trashy groups, maybe some regional banks, all of those terrible groups were ripping for the last 3 weeks, doing really well. Go look at a chart of regional banks. That's why there's no 52-week lows. Go look at a chart of small caps.
Right.
That's why
even the worst area is just
1 month flow.
What about momentum? What about oversold conditions? Nothing.
That's a little more surprising because that can happen in a handful of days.
You would have expected more oversold conditions. So, folks, contrary to popular belief, overbought conditions are a characteristic of a bull market, characteristics of uptrend. Oversold conditions are things you see in downtrends, things you see in bear markets.
I think that's encouraging. That's really encouraging that this doesn't look different.
Did you get a spike in any oversold conditions at all? Not in large caps, not in mid caps, not in small caps.
We got to hold it now, right? A lot of things were oversold yesterday at the open, right? And then weren't oversold by the close. So there was like some big saves going on. Solana is a great example. You see Solana, incredible. With the selling in crypto, holding its range, not getting oversold. Those are the kind of ones that you want to look at, play a bounce in.
All right, Spencer, let's give Strazza his flowers. Strazza, we don't want your head getting any bigger, so if you want to leave for the segment, that's fine. Throw up the Rocket and the Cinemark. Both these stocks had new 52-week highs yesterday. The day that the VIX literally tripled overnight. Strazza's got these two stocks that literally made new 52-week highs yesterday. The world's supposed to be coming to an end. These stocks are making new highs. By the way, not stocks these aren't food stocks or consumer staples. One of them is a fucking movie theater making new 52-week highs, and the other one is a mortgage company. Talk about things you didn't see coming.
Mortgage rates are coming down a little bit.
Yeah, I guess. But even with that, you're expecting mortgage companies making new 52-week highs. So shout out Steve Strazza. The breakout multiplier has been absolutely on fire. 4 out of 5 names in the last week just getting going have all doubled, which is the point here, right? We're not going for 10, 15% moves, right? This isn't your retirement account, right? This is go big or go home. Let's go. We're looking for doubles, triples, quadruples, quintuples. I don't know what's after quintuples, but we're going for those too.
Yeah.
Nice job, Strazza. Can we get a round of applause?
We can. I don't have my sound.
And Brett Schaffer as well. Steve Strazza doesn't get all the credit. He gets a lot of the credit. Brett Schaffer as well. And Carrie, you too, Carrie. Love you. Right, Strazza? Right?
They don't help with research, to be clear, but they're great tech people and good friends. Yes.
Yeah. Strazza gets
if you want access to that strategy, it's the very first link in the description. You can get access there. Breakout multiplier.
Yeah. This is the coolest thing. This is the coolest thing we've ever done. We've never really combined technology with humans to this extent before, in this manner, to really shoot for home runs. Also, we're all of these things together. We've never done anything like this ever. Pretty cool.
All right. I'm bringing on Kenny.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Think I'll stand for this one. What's up, y'all?
Is the bull market back?
Doesn't matter. Who cares? It's my market.
Why are you dressed like a milkman?
It's my market.
You're dressed like a MAGA milkman.
Amity beer, man. Come on, man. Get with the program. What's shaking, boys?
Where does one buy a ringer tee these days? Right.
What?
A ringer tee. They're tough to come by.
Yes, that's why I got it.
They make my guns look bigger, so I like to wear those.
You don't see this stuff anymore. So listen, first of all, you guys, get to my website, hitthebid.com. You want to see how to trade. You want to trade around VWAP. Yesterday was an extravaganza, okay? Other than me being on the wrong side of a 40-bagger on volatility, which was pretty sick, one of the worst days I've had in 30 years to be on the wrong side of history, every other trade worked. And I'm a new man. I feel like I went to rehab yesterday. So I have a trade that works pretty well. That reversion trade around VWAP, your reversals, your prior day VWAP. And for some reason, I'm just sitting there shorting volatility like a schmuck. I got issues. But that's not your problem. That's my problem. What I learned yesterday is and everybody has these cliches about trading. When you have something that works, do that. And yesterday was awesome. So if you strapped in after I got off the air, I don't even remember talking to you guys. I was literally up for 36 straight hours. So I finally crashed at around 12 o'clock in the afternoon, just fell asleep at my chair. But if you went, though, I remember having a brief conversation about relative strength. And some of the stocks that I gave you have been really, really strong, and they stayed strong even in that tape. How about Sava, everybody? Have you seen what this stock did? I mean, one of the first stocks that went green yesterday. More fraud, more drugs that don't work.
Shout out to the fraud. Shout out fraud.
Right. And then you had ASTS. I mean, I could go on and on and on about these names, but the bottom line is, if you stuck with some of the stocks that I gave you guys over the last couple of weeks, these remained pretty damn strong. And once they broke over the VWAP, they were just on fire. So it's almost as if they ignored it, that the market was getting hammered. And even the Qs, once you went down to 420, and again, if you don't believe that the market is rigged, look, you're in the middle of Volmageddon, right? You're in the middle of major, monstrous moves, yet we hit 420 exactly to the penny. That's where we bounce. And if you don't think we're in the matrix, I was talking about how we got to go back to the 420 lows, and the Qs go to 420. The 420 lows I was referring to were the April 420 lows when we pivoted that last time after the sell-off, and we go to 420. Here's a little VWAP break, and you still wound up making about 15, 20 points. Exciting.
You looking at the indexes this morning, Kenny? You got some individual names.
I am all about the individual names today. I'm going to be watching the Uber.
Uber? Why the Uber?
Uber reported their earnings.
Man.
It already had a nice little sell-off, and now it's taken off again. So again, what I like to do is I wait for the reversion to the VWAP. So now that it's rocked back above that 6250, I look for it to break back under 6250, maybe rolls back over the 6240 area, 6250 area is the VWAP. So again, looking to play a fade. I don't trust the market right now. Obviously, I think it's a little broken. I still think there's going to be some more selling, considering we had that nice bounce yesterday. But I'm looking at Uber. I'm all over Jumama getting smoked. Again, this is why I don't own stocks going into earnings reports. You never know what you're going to get. Absolutely hammered. I think there was rumors of a secondary or a third area or a fourth area. I don't know what the hell's going on with this name, but it's getting hammered. I'll look to see if there's any buyers around 750 on this one later. We also got Caterpillar, I believe. Big guy reported, right? Caterpillar on the list today.
Yep.
Right on. And there was one more I really liked. Hang on. I want it to be on the Uber, the Caterpillar, and Palantir. Big fan. Big fan of the Palantir. It's just chopping around so far. Again, stock cannot get into the 30s. But again, if this market sells off, I think everybody's going to take a beating, and I'll look to see if this one sells off also. So that's my main list. Again, I'm always watching UVXY. It's above $52. I never thought I'd see it over 30 in my lifetime again, the way this thing was just disintegrating every day. But until UVXY really starts to plummet, I'm not talking about 15%. You want to see it down 40, 50%. And it's going to happen. But right now, I still think there's more sellers out there, and I'm just looking to play these rollovers on the earnings place. And the best place to be is at my website to see this stuff live, because I could be saying something now, and a half an hour from now, I'll be doing the exact opposite, because that's how trading works, baby.
There you go. The link is in the description. And
never a dull day, Kenny. Never a dull day, my friend.
No, not lately. Not lately. So, listen, I just want to say, if I'm not around tomorrow, I'm headed down to Georgia. Wish me luck. So we got Volmageddon, and I'm driving into a hurricane.
Good luck, buddy.
It doesn't look good down there, Kenny. Be safe.
I know. Thank you.
Yeah.
Thank you. Hopefully I make it, and my daughter makes it. All right, guys. Good luck to everybody.
You've done worse things, harder things. You'll be fine.
Yep. See you guys.
Adios.
I don't know, man. I was on AccuWeather yesterday. They're always over dramatic there, but this storm is basically was a hurricane, is not now, but it just stopped moving. It slowed to a crawl. It's going to just dump rain on Georgia and South Carolina for days. So
come on, amateur hour. We're in the heart of hurricane season. You're talking about a little rain. Come on now. I'm not from hurricane territory. All right, let's bring on Todd Sohn. Category 5 or get the fuck out of here. Let's go.
All right. I'm bringing on Todd.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Todd Sohn.
What's going on?
Has the VIX ever tripled overnight, Todd?
Listen, the range on the VIX yesterday, what was it? The low was 20, the high was 65. That was the largest single day range, I think, in history.
How many sigmas?
A lot of sigmas. I don't know the exact number, but
Strazza says it was all the sigmas.
It was all.
There's no more sigmas in the world after that move.
It was everyone. Yeah.
I mean, seriously. So what is it? Sigmas is how many is standard deviations, right?
Standard deviations, right?
So if it's 6 standard deviations, it would be 6 sigma. Is that math
right?
Yeah,
I think that's right. I mean, I'm not a professional statistician.
I'm not a math major.
But
addition, subtraction, a little algebra, that's as good as it gets for me.
I mean, getting 2 standard deviations is significant. Getting 3 and above is very rare, historically rare, right?
So these sigma events, like what we saw yesterday, should happen like once every 3 billion years or something like that. But they happen almost every day.
They seem like they're happening more often.
Yeah.
For whatever reason.
I guess markets are not efficient. I guess there are some inefficiencies to take advantage of there, Todd.
I believe you are correct on that one.
How about that? You hear that, Strazza? Todd Sohn says, I am correct.
So, hi, Todd. What are some things that you do as a technician in environments like this to measure the severity of the corrective action? Right,
we go straight to the income statements, right?
We had a correction in Q3 of last year. We had some corrective action earlier this year. We have a correction now. What do you look at to kind of determine how bad is this?
This is where referencing history comes into play, and whether history is 1 year ago or 35 years ago. That's the best we can work off of, right? And I can go back and say, all right, when is the last time the VIX went from 20 to 60 in a day? Or how does this VIX number, we settled at like 39 or something like that? How does that compare to prior readings in that zone?
Right.
I can go back to 1998 when we had a similar scenario, right? LTCM blows up. The VIX goes from 16 to 40 or something like that over a couple of weeks. So,
and it was still a bull market and things were okay.
Yeah, you had a pretty good shakeout. Which may be the case right now. Totally fine. I mean,
is this 1998 again, fucker?
I think it's a comp you can throw out there. It's 2024.
That's a good one.
That's the best comp I've heard. By the way, Jim is telling me that the VIX doesn't follow normal distributions. Yes, I know. That's my point, by the way.
Now we're getting fancy. Normal distributions. But anyway.
I don't know what kind of show you thought you were coming into. This is the morning show. We are not messing around.
The coffee hasn't hit yet. But this is where you have to reference history. All right. Just look at what happens when the VIX gets at these levels. Yeah, you're gonna get volatility, you're gonna get a shakeout. You're not fully oversold in equities yet. But more often than not, at a level like this, the forward returns are really strong 6 to 12 months out.
Like 90% hit rate, something crazy, right?
Above 80, depending on what threshold we're using as the VIX level, but really good probabilistically speaking.
Is this still a bull market, Todd?
Yeah. How's it not? I don't know how it would.
I agree. I'm with you.
How do you know when it's not a bull market in the middle of a bull market?
Well,
when you get stocks have to make new lows for it to be a bear market or correction. You're not getting that.
80% of the stocks have their 50-day above their 200-day average. That sounds like a bull market to me.
Yeah.
Right? 3/4, that's a majority. When that number gets down below 60, then I start to wonder what's going on.
So if it walks like a duck, talks like a duck, it's probably not a chicken.
Well, if we're talking about Church of the Smoking Fish Chicken thing, I don't know. You sold this dispenser yesterday. No idea.
Is there a Solana meme coin that you want to discuss today?
There is.
All right, talk to me. What do you got?
The Church of the Smoking Chicken Fish.
Yeah.
Were you enjoying the internet as much as I was yesterday?
Yeah. I mean, there was a lot of good stuff out there.
Incredible. What a day! What a day for Twitter.
I mean, that's what happens when you come in. Japan's down 12%. The VIX is at 60.
Everybody's
especially on a Monday.
Everybody stops working and just starts making jokes on social
Well,
media.
well, yeah. I mean, yesterday was one of those days where you just were like, okay, I'm just sitting on my hands because we
Right.
know that there's just one direction. I mean, yeah, if you bought the open, you made some money there,
Yeah.
right? Rally there, but largely speaking, little longer term players, you're just sitting on your hands all day and saying, all right, what does this mean?
I was annoyed that I was in front of my screen so much yesterday for that reason. Because I was
Yeah, I mean,
guys.
starting around with some VIX stats. That's what I was doing. I'm like, okay.
So when you go back, what do you find? Like VIX spikes like this, do they happen in the middle of bull markets? Do they typically happen in bear markets, at the end of bear markets? Like, is there
late 90s is the best example for the bull. The trickier example would be 2015, right? August 2015 happens. The market.
Yes, Todd. I was trying to explain to my wife. She's like, "Oh, we haven't seen this since the Great Financial Crisis." I was like, it's not really like that. I'm like, it was more like August of 2015 because we were in the process of moving to California at the time. So I was kind of comparing. I was like, remember we're moving to California, shit was hitting the fan. That was kind of like that.
That was the oil crash situation, but also wasn't there an ETF flash crash in 2015?
I think you might be thinking of 2018.
Okay.
The XIV blew up in January 2018. Now, that was also coming off of 2017, which was the lowest volatility year basically in history. And it ended up with the vol product blowing up.
That's right.
2015, if you think back what happened, 2013 was amazing for stocks. 2014 was pretty good. And then things started to really deteriorate internally. There were some pretty not great divergences.
Trannies were diverging, bunch of stuff. European banks look terrible.
Yeah, things were deteriorating. And then finally there was, I mean, whatever the catalyst, there was a China devaluation, whatever you want to call it. Things cracked August 2015. The lower low. No, so I think this is where now comes into play. You rallied, and then you made a lower low in January or February 2016. Yep. Less stocks making new low. All the divergences came. I wonder if that might be the roadmap here. Like we rally a little bit, and then maybe dip a little bit lower into the fourth quarter.
Yeah, but Todd, but Todd, at that moment, we were getting so many new lows. We were in a bear market. We were getting a ton of new lows. So you had something that could diverge. We don't even have that yet.
There's no difference. The divergence is cap weight weakness versus equal weight right now in a way.
Yeah, cap weight.
That's not surprising though. If tech's underperforming, that's what's going to happen.
That hits the cap weight. Like the new lows. The new low day yesterday, you had 40 some odd % of stocks at 1 month low. It's not that bad for what we saw on the surface. It's not even near like an oversold
3 month
condition.
lows, 1 month. I mean, just
and so that's the equal weight S&P actually holding up somewhat okay, while tech and anything momentum gets hit.
Yeah.
So I guess I see your point on the bear market versus the 2015, 2016. Well, you had a similar scenario in 98. July 98 happens.
Right.
You made a lower low in October 98, but divergences built up, and then we rallied for another year and a half or whatever it was.
Yet another 1998 analog or comparison. There's a lot of them out there.
Yeah.
I mean, I wish in a bull market. It continued. It was kind of like
it was a tech.
But even that was more Armageddon than this. I mean, not at the VIX level, but that's when long-term capital management was blowing up. You had all this Russia stuff. Right.
Yeah, I mean now it's Japan now for whatever.
Can we talk about Japan? Throw up the Japan chart, Spencer. Can we talk about Japan? I really want. Every time we talk, Todd, you bring up some kind of Japanese industrial or Japanese financial. Like it always comes back to Japan with you, Todd.
What are they doing?
Which I appreciate.
What's going on over there, Todd? What are they doing over
there? Market from 35 years ago.
We're trying. I mean, that's the easiest answer.
Isn't that what's happening?
Come on.
We spent a half hour in our team meeting this morning trying to figure out what the hell's going on with whatever it is they're doing over there.
And what did you find? I love this.
No one knows.
Nobody knows. What are these Japanese doing? Nobody knows.
JP Morgan, there was a headline that says JP Morgan says the unwind, the yen carry unwind's half done. I'm like, well, how do you know half? Like, I mean, you have big clientele there, obviously, but
they barely moved their interest rates. It's half done. I don't know.
I don't know. So
and now the take is right. We can't cut because if we cut now, we make that whole dynamic worse. Right. This is all about the spread, the differential between our interest rates and theirs.
Yeah, I mean, now you're getting fancy macro on me.
Here we go. Here we go with the fancy macro.
I don't do the fancy macro. I mean, now you're getting color. This chart here is the easiest thing, and I think a lot of Japanese names, the banks and the industrial names, right? The conglomerates, a name like Hitachi and Keyence and all that stuff, they were running really hot. You want to talk about momentum? Those are some of the best momentum names around the world. And when momentum mean reverts, it's extremely painful. That seems to be the case right now. Now the chart in the near term is a little sloppy, right? I think you're going to take some time to digest this, especially now looking at this chart over the last 35 years. But I still think you can make the case to buy Japanese stocks, right?
I don't know. Can you?
I think so.
You're
I
buying
think so.
Japanese stocks right here, Todd?
I think you give it a little time to correct and digest, and then we're going to take another stab at this 89 high and break through it.
Of all the things in the whole world to buy, Japanese stocks are the ones you want to buy? Probably not.
I love me some Japanese stocks. I like them better than Chinese stocks, and then European stocks.
All right, you're setting the bar real low here.
Do you
There's your
want-
denominator bias?
Now, hold on. When you buy them, do you want the yen exposure or not at this point? Because that's
I like a 50-50 because I
always like that about
I feel like we've done this before 50-50 because I had no idea. It's made sense to play unhedged.
Hold on,
in the last
explain that
2
to
weeks.
the folks who might be new with this particular strategy
So-
that I absolutely love, never heard until you brought it up. I couldn't agree more. Tell the folks how it's done.
When you buy Japanese stocks, you for us common folk, you have to worry about FX exposure. And there's always a question of, okay, do I hedge out the yen exposure? Do I unhedge it? I think the easiest way, and you can do this through ETFs, is to play it 50% hedged and 50% unhedged. That way you're not worrying about the currency impact. It's hard enough getting the equity direction right to now throw in the FX variable. You're making the trade twice as hard for yourself.
Yep.
And not every country gives you the ability to do that. Number one. Number two, not every country has such a fucked up monetary policy like Japan also, to be fair.
Right. They make up for it with food though.
Anytime I ever say anything bad about Japan or Japanese people, I feel guilty because I love everything about that country so much. It makes me so happy.
Yeah, it's great. It's fantastic.
Great.
So I think the 50-50, it's paid to play it unhedged in the last 2 weeks, obviously, but that move has been so swift that you may have been on the beach and the whole move just happened, right? You missed it. So that's why I do the 50-50 thing. Like it's just easier.
Yeah.
Some people maybe they could be in the trenches trading these things all day. They might have a stronger preference, but I think for the majority of investors, that's the route to go.
And also last year when there was nothing making new all-time highs, nothing making new 52-week highs, the Hedge Japan ETF was already making new all-time highs.
Hedge Japan was one of the best places in the last 12 months. It's like, okay, now it's finally stopping working. Things go down, right? Market's correct. Clearly more volatile when you start going outside the US though.
Todd, you brought some charts with you.
Yeah, let's do it.
You can
what do you want to talk about?
Todd, I want to know what you want to talk about. You brought a bunch of charts, always good. I see you got some scatter plots. I love a good scatter. The world needs more scatter plots. Right?
Great scatter plots, Todd.
I love scatter plots. This is the blue zone, right? The blue zone's where people live to like 150. This goes back to the VIX, right? The VIX is in the top decile historically over the last 35 years. The forward returns from the S&P 500 average 12%. You have about an 80% hit rate on these. So this is a good place to be. It doesn't mean there's going to be there will not be more volatility in the next 1 to 3 months, right? Funky seasonal, election's a wild card, who knows? But more often than not, you want to hold your nose and buy stocks over here.
Huh.
But which one was yesterday? Where was yesterday?
Yeah, he can't see. Yesterday is too hard. Well, it's not even going to be on here because I don't have the forward 6-month return.
Oh yeah, duh.
It's the red line.
But the red line was where that 65 print was, and then we settled at like 38.
Got it.
But that 65, that was so rare. The only other observations where you're getting is 60 VIX is in 2008 and 2020. 2008, clearly there was a little bit more pain, but it turned out to be a generational buying opportunity. And 2020 was great too.
So for this generational buying opportunity that we just got yesterday, you got the COVID, you got the great financial crisis, and what are we going to call yesterday?
What was that Monday?
What was that Monday? Is it going to be Japan raising rates? Is it going to be the VIX tripling? Like, what are we going to call that?
I got to think on this. There's probably something good here.
It's the BOJ. It's the BOJ surprise.
The BOJ surprise.
The BOJ surprise. The yen
better.
unwind Monday, August 5th.
Talking about a carry trade. People love talking about the carry trade.
I know, but that's been going on. You could have blamed all of them on the carry. You know what I mean?
So, Todd, you once told me that it's normal and maybe even healthy for the best players to score most of the points.
Yeah.
What we're talking about is the biggest stocks and the way that they contribute the most gains to the indexes, yada, yada, yada. What if that stops?
So the bench has to step up. It's going to be, that would not be great for index cap weight investors.
Yep.
And that's when you got to actually do your homework and look at what groups are working.
Yep.
You would probably want equal weight exposure, unless the equal weight index is also falling apart. Then we got a major problem. But it's a great time when that happens, when the starters are exhausted, to be more productive in what you're doing in your investing and trading. Searching for that leadership. Is it going to be healthcare? Is it going to be REITs? Industrials? We'll see.
Right.
But this is where I think the active part of investing comes in, when the cap weight indices, the names at the top, start to struggle.
Yeah. So let's talk more about it.
That's all about the bench.
A few weeks ago, when the selling in tech really began, everybody was talking about the great rotation because money was coming out of tech. You could see it, but it was actually also pouring into the unloved groups, the small caps, the
small cap
banks, the real estate. Since last week, that's not so much the case. You look at something like small caps, they gave back almost all of the progress that they made since a couple weeks ago. How does that go if they're selling the leaders and then we're not getting that rotation into the bench?
Yeah, so that's when I think you would get some sort of, just say, a near-term bounce, and it gets faded and things start to deteriorate. Right. And I start to get worried. Right. If the leaders aren't leading, they're not responding, and then the rest of the team is not participating, I think that's when bull turns to bear, right? A bull market turns to a bear market there. Small caps, I'll give a little bit of leash. They had such a great new high reading there that it was almost a little bit short-term climactic, and you always get pullbacks when you get those surges and new highs.
Yep, fair.
I know it's super frustrating that they've just gotten wrecked since then.
It's a big pullback, but you do see we saw in 2020 too in the second quarter.
Yeah, I mean, even think about 2011. This is an entirely different scenario. You had a big surge in new highs into the summer of 2011, and then the market got rocked. And so sometimes that's just what happens. Eventually, once things shook out over the next 3 months, then we moved on higher, and you had a great 3-year run after that. So I tend to wonder if that might be the case too. So I mean, do I think
you think they need time? You know, we had some blowout momentum readings over the past few weeks, and some of these groups that are giving a lot back now. And it doesn't undo the positive developments.
Yeah, you have the new high data when it spikes is usually very poor over the next month or two. But when you start to get further out, the returns are still really strong. I think that's usually how it works. It's the same thing with like a breadth surge, right? Percentage stocks with their 50-day, percentage stocks with their 20-day. The initial readings are like, wow, this is super strong. Sentiment gets frothy, and then you get a shakeout. I think you guys call it the rug pull right after that. And people get scared off of that, and then eventually the shakeout happens 3, 6, 9, 12 months later. We're in pretty good territory.
You think tech stocks will still be good into the back half of the year, or do they need time?
I like the idea of them correcting pretty good, and then seeing stuff like healthcare and real estate working. I like the equal. I do. I like the equal weight, the bench playing and leading a little bit better. I mean, there's been so much money into tech ETFs and so much money ignored to every other corner.
Yeah,
that I really do think that that's going to have to at least reverse to some extent.
And is that okay? Is that like a risk?
It's a risk for all the index passive investments out there. But if you're going to buy RSP, I think it's great for RSP. I think it's great for active managers out there, right? Who may not be as overweight tech and have overweight corners to other areas. And overall, it's good for participation.
Totally.
Right. Broader participation. So I like healthcare. Healthcare hasn't worked in ages. So I'm very gung ho on healthcare right now.
Healthcare new
consensus.
all-time highs.
Yeah,
all-time
so
high
yeah,
close for the week.
great on absolute basis. Relative, it's been unbelievably frustrating, and I'm wondering if this is finally its time to work for a little bit.
Todd, is healthcare a defensive sector?
Some of it.
Some of it. I think it depends who you ask.
Biotech. I don't
is
find
not.
anything defensive about biotechnology stocks.
Managed care is
UNH
defensive.
Is UNH defensive?
I think managed care is defensive. Yeah.
It's the largest component of the Dow Jones Industrial Average, so you
but-
want to be
but
careful a little
speaking
bit.
of speaking of the Dow, you'll appreciate this. In the note, the charts I sent you, check the second to last page. We can talk. This is silly.
Spencer, that's your cue.
I have to find it. It's
page.
World
Yeah,
Most
31.
Stock Market Index is being discussed here.
It's an Intel chart.
Oh, oh, this is
Okay,
great.
so-
I was talking about it. It's such a small percentage, huh?
We shouldn't even talk about this company anymore.
I mean,
It's so
it's fun
bad.
to make fun of. Make
so
fun of. Go ahead.
there's no investment implication here. I feel like this is made for you, JC. This is just like a bar talk chart that anytime a weight in the Dow gets below 40 or 50 basis points, you can bet that the committee, the people who run the Dow, because it's an active index, it is not a passive index, will make a
Is there
change.
such a thing as a passive index?
Nah. The greatest marketing scheme ever created was passive investing.
How dumb people are of believing it, huh?
So Intel's 34 basis points now. I am willing to wager that they will sub it out and put Nvidia in, because Nvidia split. It's like $100 now. That's fair territory for the Dow.
Why haven't they done it already?
And when is Google going in for Verizon?
They could have done this 12 months ago.
I don't know. Maybe they're waiting out. They're hoping for Intel, like all.
Why do journalists do a lot of things, Steve?
Why? Yeah. So this is what happened. Walgreens was like that. It was down about 40 basis points. They flipped it for, I forget what went in.
Walgreens was bad when they put it in the Dow.
Oh yeah, I don't know. I never understood why
Already
Walgreens.
bad. Like,
Yeah, that was dumb.
More of a CVS
How
guy
about
myself.
Walgreens is the healthcare stock? That's a little weird too.
CVS owns what, Aetna now, so I get that.
Do
but
they?
yeah, they own one of the healthcare
Well,
providers.
that makes more sense. But Walgreens?
So anyway, I this is like free agent signings to me. You know, who's going to what team? It has zero investment implications, but I'm waiting for them to say, all right, we're taking Intel out.
Yeah, but I'll tell you what, Todd, on the flip side, when I see United Healthcare breaking out of a multi-year base to new all-time highs, there are investing implications there, considering it's the largest component of the world's most important index, right? That's like the that's like the Michael Jordan of the Bulls, right? Right?
Yeah, well, it still says this is a bull market despite what's going on in the last 72 hours. And maybe it's good. It's a sign for healthcare. It's a foreshadowing for healthcare to actually take the leadership baton here for the next.
By the way, utilities were a leader in the 03 to 07 bull market, so like it's not that far fetched. It's fine, right?
I looked yesterday. Utes are the second or third best performing sector this year, which I was unaware of. They've had a really good run.
Constellation Energy was up nice yesterday.
You got some of them trading like AI stocks.
Right, Todd, I know you had to run, so.
Oh, sorry, Todd. Can I get one more in?
We can do 2-3 more minutes.
Okay, I want to talk sentiment. Sentiment. Throw up that sentiment slide, Spencer. So this is just a composite we create. Brings in the AII, the investors' intelligence.
Oh yeah.
A composite of a bunch of them, right? All of these polls and readings, they have their own flaws. None of them are perfect, but this is a pretty good job of showing just how extreme sentiment was coming into these. The data is going to be coming in the next few days. My suspicion is quite the mean reversion in sentiment, Todd.
Should be. So put calls, we know that's real time. That's starting to spike, which is good. The surveys we'll get over the next 3 days. We know what the VIX did, so I would suspect this is going to go from extreme bullish to, depending on what the surveys does, at least neutral, maybe.
Yeah, and forget about this particular composite. I just wanted to show that.
I think
one way to look at it.
You look at it this way. I use my flows, which have been pretty aggressive recently, especially for tech.
So tell me, so good. I'm glad you brought that up. Tell me about flows. Why
flows
should I care?
Because it's investor sentiment, right? Flows aren't a signal, right? You could use this composite as a signal because it's very actionable, but flows have started to look like 2021 a little bit, when things were way offsides in terms of sentiment. It's been all in on tech, but now you're seeing small cap flows pick up, right? All these other marginal corners. And when flows run hot, especially on a trailing 3-month basis, they've done about 200 billion in equity ETFs. That's a lot. It can set yourself up for a pretty good shakeout. And when you pair it off with the data you just showed, which we'll look at ourselves too, you have a compelling story for, okay, I think we're probably going to correct here, or at least be on guard for it. And then sentiment, once it shakes out, once you start to get more bearish, that's a great time to buy then. I think sentiment is probably the best tool that we have out there.
The best tool.
Might be the best tool. Breath
It's
readings
hard-
obviously help.
It's hard though, even for you and me that do this literally all day, every day. It's still hard.
Oh yeah, it's an art rather than a science. Maybe it's a
So
bit
how
both.
can you say that it's the best tool that we have?
Because when the breath data is great for participation, how things are looking, but when I start to hear how dire or how optimistic some folks are, that should raise your antenna that the opposite may end up happening.
Well, it's also a lot more. It's a lot more actionable
Yeah.
at pessimistic readings than it is at optimistic
Oh,
readings.
totally. Yeah. Optimistic readings like 2020, 2021 can last for quite some time. It's usually the dire apocalyptic stuff that you got to get right in quickly, because that'll bottom out and start to rally with serious velocity.
So sentiment officially, I mean, unofficially, we don't have the data yet, but we can pretty much bet here. Sentiment no longer a headwind.
Yeah, I think that's fair. I think you would upgrade if sentiment was a negative in a like a balance sheet or whatever. You upgrade it.
What's a balance sheet?
Yeah, but it's I think it's just fair to say it's no longer the headwind. We're neutral, and when you start to get those put calls skewing more to the put side, then that's going to be actionable too. We're getting there. We're getting there. Give it one more flush, and we'll be pretty good shape.
All right, Todd, we'll have you back. We'll see how this bull market is progressing, if it still is. My suspicion is it is. Yours as well. I guess we'll see.
We will.
Thanks a lot, Todd.
You guys take it easy. Take care.
All right. That was very kind of Todd to stay for a half hour with us. Always kind of him to join us. All right. It is 9:28, minute and change until the open. Shall we look at some movers and some
let's
news?
see what's going on this morning.
What?
What's going on this morning?
Oh, man. A lot going on this morning.
Want to talk about the
where do you want to start? Maybe we should start with like someone that's good, like Uber. Since that already came up. Kenny brought it up. Uber had the earnings. Dara was making the rounds this morning on the telly. But we're up this morning. We're up 6-7%, somewhere around there. The EPS beat, the sales beat, the gross bookings beat. The guidance was good. They're now up to 30 million trips per day, which I don't know if there is an estimate there, but it sounds like a lot. So to me,
yeah,
it was good.
Listen to Dara in an interview this morning. Everything's clicking over there. And
pretty much.
And Tesla's taking their sweet old time coming out with this robo-taxi thing. So that's been, I guess, putting a cap on Uber for most of this year is this robo-taxi talk. They keep pushing that back. Can only be a good thing.
And then someone in the chat, Phil just said Palantir. Yeah, Palantir is all, basically two good stories today on the earnings front. It's Uber and Palantir, right? Palantir is up 12, almost 13% now this morning as we open.
Monster. We might do something with it today. The report was so good. These guys are just in a league of their own with what they're doing. Didn't they get called out on the Microsoft's call? Did you hear about that? Microsoft?
Yes. So they got called out. They got a shout out, but Microsoft, I mean, they could have shouted out like a lot of people. They just chose Palantir. But
how do you know that?
What?
How do you know that they could have?
I was reading about it. And it was like,
so what they basically
I feel like they're like, we shouldn't overanalyze that shout out.
What they basically said was that LLMs will be commoditized, but Palantir just won't because they're different. Do I have that right? That's what
more. Yeah, that's what I got out of that.
Wow, what a move in Palantir. Wow.
It was a great report. These guys are finally making money. They're on fire. It's fantastic. What a story. Love it. Super long. Bought more last week. Let's go.
Let's talk disasters. Let's start with Jumia. Holy shit.
Also,
frankly.
SunPower's going bankrupt. Exploring asset sales and stuff.
Hold on, let's get back to the alleged Amazon of Africa.
Yeah, 7 was our level. It's still our level. If you missed it and rode the double and are now riding it back, I think you could continue to get back in at 7.
Okay. Well, it's down 30% this morning. Their revenues were down 17% year over year. They missed the estimate on that. Gross merchandising volume also down. It's down 5% year over year. Total purchase volume down 7% year over year. Basically every key metric was down year over year.
Yeah.
So
the Uber question in the chat. Uber, yeah, Jemiah report was terrible. Sorry, Spencer. Uber, not a top. Pull up the chart of ServiceNow. ServiceNow looked exactly like Uber back in late May. Plunged lower on an earnings report, ripped higher. What a sweet failed move it was. I can't help. I was just looking at Uber this morning. I'm like, this is ServiceNow. So if we're back above those prior cycle highs, yeah, for now it's not a top. And we can get
Will we be looking to maybe multiply that breakout, Mr. Strazza?
I don't want to. I think the other one, the one we were just talking about, we'll probably be sending a note out about pretty soon here. We've had a really good
hot off the presses. We putting on them trades.
We've had a lot of early success.
Oh,
through
funny how
earnings
quickly
season.
yesterday he's like, I'm not buying anything. I'm not gonna buy anything. Oh, here we are. Oh, buying a little this, a little that, doing a little shopping, a little how you doing? Okay.
I didn't send out any notes yesterday. But we're having a lot of success coming in after reports. Right, and getting along the calls after the reports, the volatility really comes in. The calls get cheaper like that, and a lot of times.
Say that again, Strazza. This is really important, folks. If you're out there listening, listen to what he's saying.
Was that 3M? Was that?
Hold on, explain what that means. This is really important, guys. Focus on what he's saying.
Volatility gets crushed coming after earnings report, right? So volatility will get jacked up ahead of the report, and then as soon as the report is in, the volatility just gets completely sucked out. So we'll come in at the open. After an earnings report, a good example, Uber or Palantir today. And if the chart is right, we could catch some follow through on with earnings as a catalyst, right? And not have paid for earnings in the calls that we're buying. So that happened with GE. It came out, opened like 1%. It was up like 7% by the end of the day. So you do have to move quickly. It is a fast market. But I think Palantir and Uber offer some opportunities that we'll look at today. I like Palantir a little bit more. Palantir's report was just incredible. It was really good.
All right, a couple more. Let's look at the Caterpillar real fast. Stock is up. At least it was last I checked. It beat on top line and bottom line. Interestingly enough, their sales volume actually declined year over year, but they were able to offset that by raising prices. And then they were pretty cautious on their outlook, on their guidance. They said that sales and revenue for this year are going to be down slightly year over year. And
industrial's been taking it on the chin.
Yeah.
Yikes. I think you could look at the John Deere, JC. You got a level there, man. That's one. That's one. You could lean into that range. All right. We'll see.
There are opportunities out there, and man, you know what? When you go back, and I don't want to be like that VIX, expert, because I'm not, and I don't want to be, and that's cool. But man, in my experience, when you see these VIX spikes, holy shit! And you want to know another thing? We've been seeing a lot of things that tend to be early cycle stuff, right? Like some of those breath thrusts that we saw, early cycle stuff that are weird because we're not really at the beginning of any cycle. But we've been seeing a lot of things that have been coming up over the last few months. Is that volatility spike one of those things? Another one to add to the list.
Is it exhaustion? Is it initiation? I think that's a really good discussion that we can have about a number of things.
That's what I'm saying.
Yeah.
It's just unusual to have all of these early cycle indicators or early cycle characteristics, I should say, when we're 2 years into a bull market already. This VIX spike is just another one of those, but we've already been seeing them, which is unusual. Right?
I just have to say I'm disappointed. Some of the people in the chat I thought were smarter. Anybody coming out today and like taking a victory lap about like the intraday rally and green pre-market today are like the people who have been out on Twitter since last week, parading around with their perma bear stuff, even though they missed like 100% move over the past 2 years. So let them dance. It's just one day. Of course, there's going to be an epic oversold rally. We all know that. Then we got to take it from there.
This is a good lesson. Go to the back of the Stock Traders Almanac, all the way in the back, and Jeff Hirsch, shout out Jeff Hirsch, has a list of all of the best days ever in the history of the stock market and a list of the best weeks ever in the history of the stock market. All of them are in high volatility markets, right? All of them. Every single one. 1987, 2008, right? All of them. 2000, all of them.
So expect it. And if the market's up 5%, that doesn't mean like, oh, I was right. Like the selling pressure didn't matter. It means that's what's just normal in a volatile environment. Billy Cunningham says, right now, we don't know. We never know.
We never know.
What we do is we try to stack the odds in our favor and exploit asymmetric risk reward opportunities. When the VIX is spiking almost 200% in the morning, that tells us that the downside risks are elevated, and it skews that risk reward equation that used to be maybe so favorable for bulls in a bearish direction, right? So to lighten up or take a little bit off because we don't know is just a prudent thing to do, I think.
Yep, that's a good point. We never know.
Should I try to get the Vixologist on the show, Jim Carroll? Do you guys know him?
No. Who is he?
No.
No? He's, I don't know. He's the Vixologist on Twitter. He's the Vixologist.
The guy with the banana who does all the VIX stuff. He's got the banana. He's good. I would love to talk to him.
I don't know who that is.
He's got the banana, JC. You know who I'm talking about? All right.
I don't know what you're doing with bananas these days.
No.
The less I know, the better.
No, not. He's got the banana.
All right. I don't know.
Steve, you wanted to bring up Chegg for some reason, probably because it's maybe the end. I think we have that Chegg chart. They had earnings. I saw some commentary from the CFO, basically saying like we can't predict guidance. It's like a total crapshoot for us. Like we don't know what our business is doing, which
100%.
Never a good thing.
So, and we'll give some more color around that. I think you know what's going on here too. Don't listen to the crazy people who tell you AI is not real or the AI tools are no good. They're putting industries out already. The new AI stuff. This is one of them. So Chegg, it's like online learning, or they're like selling textbooks, right? Or like school course materials. Is that correct? I believe.
Yep, exactly.
It came out 12 months ago when the NVIDIA stuff started popping off, like last May. And they came out and were like, this is not good for us. It's going to be hard to survive. And you're seeing it. So they're not the only ones. There are more examples, and we'll continue to talk about them. But AI is so real. It's disrupting, small industries for now, but that'll continue to change.
All right. Speaking of AI, that's a good segue into the Google thing from yesterday. If we can bring that chart up.
So this is a fascinating case.
It is extremely interesting. And sadly is not the end. It's never the end because the lawyers are undefeated. And of course, Google will appeal the ruling. So if you missed it, federal judge ruled that Google basically is a monopoly, or they engage in monopolistic practices. And as far as what that means for Google, we don't really know. It could mean a variety of things. It could mean that the judge orders Google to offload some assets or separate the business in some way, separate the search business from everything else, or simply offer more browser choices or search choices on phones, right? Because essentially that was the crux of the argument here. Basically, it was a two-pronged ruling. One, Google's practice of paying billions of dollars a year to Apple to be the default search engine, that in and of itself was monopolistic. Also, Google manipulates the pricing for their advertising rates, which anyone who's ever paid for ads on Google probably would agree with. And so the reason this comes back to AI to bring it all full circle is this stat. When I saw this, it blew my face off. They had some guy, do an analysis. This is part of the lawsuit. we know that AI models are trained. They have to be trained on something, right? And they're trained on search results. That's what they're trained on. So this guy found that on desktop, Google, 93% of all unique search phrases are only seen by Google. That's on desktop. And on mobile, 98.4% of all unique search phrases are only seen by Google.
That's fair.
So basically, Google has the ability, at the moment, at least for now, they have the ability to become like the dominant player in AI because they're the only ones that have access to the majority of unique search results, right? Or unique searches.
They own all the important data. It's incredible.
Yeah. It's like they have all of it. They have all the data as it stands right now. Whether that remains the case to be determined.
Why do you think Google Ventures is so successful? They have very, very good information.
For long-term investors, right? We don't know if these levels will hold, but the closer you can buy any of these Mag 7s, and Google's my favorite of all of them right now to own. Against these prior cycle highs, you got to do it all day. Put it away. This company
Think about it. Of all the acquisitions in the history of Earth, DoubleClick and YouTube
DoubleClick was unbelievable. I don't even know what they paid for that.
Greatest of all time. I think YouTube is top 3.
I just want to remind everybody, earlier this year in Q1, Google missed AI. That was only like 6 months ago. Everywhere, Google missed AI. Remember, Spencer? Google missed AI. Google missed AI. Okay. This company is an absolute powerhouse. They will absolutely, without question, be broken up one day. How long that takes, we have no idea. That could be 10, 15, 20 years from now. They have to get broken up, or these companies will grow to the sky. They're going to be $10 trillion. They're going to be larger than like all the governments in the world. So they will pay every single one of them. But it's not
one of the bullish. This is one of the bullish arguments for equities and the size of these companies, that they could take pieces of their companies and spin them off, and they're limiting the amount of shareholder value that can be created by these companies because they're stuck within a bigger conglomerate. So if they're spinning them off, investors can focus on those areas.
That's one way to think about it.
For the broader markets.
It depends on what they're trying to do and the cycle, right? I would argue right now, these companies are far more valuable in aggregate because they're taking bets. They can make a big bet in one group that if it doesn't pay off, or if they fall on their face from one revenue department, the other one picks up for it. So they're like hedged because they're so diverse. And that's why they're able to invest these crazy amounts of investment dollars in AI, right? And making bets on new things. If you spin them off, JC, into 8 different businesses, they can't be as aggressive taking bets, right? So this is allowing them to grow even more in the future.
But that's fine. But if they already have, they're not making a, if they're spinning it off, they're not making a bet. It already worked.
Yeah, I was going to say, Steve.
Now you're just giving
bets have worked, right?
Hold on. You're giving Wall Street
AI
visibility into, hold on. You're giving Wall Street visibility into what that particular segment of the company is now doing instead of it getting lost in the weeds of all those other things. I think there's a ton of value to unlock there, spinning off these companies in the future. I think that's a future tailwind for broader markets.
Maybe.
These market caps are unsustainable. Watch.
They lose power, period. Like, you're right. It'll unlock value from a financial statement perspective. It's just math, right? But will they be as powerful and dominant in the future? No, that's probably the end of big cap dominance once they break them up. You're right.
Which, again, could be in 10 years.
Dominance. It's about, are these tailwinds for broader market strength? I think the answer is yes.
Probably. It's not a bad thing for the business environment, right? But it's also just not a reason. The fact that they're going to deal with antitrust stuff in the future is not a reason not to invest in these companies at all.
Right.
Like, that's not what I'm saying. They're incredible. And also, guys, right now, like, they're protected in a way because all 4 of them, Microsoft, Google, Meta, Apple, are all racing and spending tens of billions of dollars building out AI and trying to be the AI leader. It's not just one company, right? So, like, at least they have comfort in that. There's a big race between these 4 companies to be the dominant player in AI, and they're all fighting for it right now. So it's incredibly competitive. It's just competitive among the big tech companies with the biggest pocketbooks, which is what we said would happen, a year and a half ago?
Right. And let's also state the obvious. If you own Google, and Google is, or Alphabet, and Alphabet is forced to do a spinoff, you still own the spinoff, right?
Thank you. Yeah.
Like, you still own the whole pie. It just Now it's 2 pies, right?
These guys are straight up bullies in the tech world, right? They won't be able to do that if you break them up, right?
Sure.
So they will lose a little bit of what they have for sure.
Okay. JC, I just looked it up. Google spent about $4.75 billion
Ridiculous.
on DoubleClick and YouTube combined.
Wasn't YouTube like 1 billion?
4.75 billion for DoubleClick and YouTube combined. This company makes $86 billion per quarter.
I know we say this all the time, but YouTube is just so good. Watching the Olympics on YouTube, I love YouTube. I think it's
The
fantastic.
Sunday ticket on YouTube last year was great. I'm looking forward to that again this year.
They have all the money. They're going to keep buying all the sports rights, and we're talking about YouTube TV specifically.
They will.
Yeah.
The future of sports is Amazon, Apple, and YouTube. That is. I mean, that's the present, frankly, and the future.
Did you guys see?
I know, but is Amazon and Apple anywhere near YouTube
Amazon
right
just paid for NBA rights, my friend.
Amazon, yeah, I guess you're right. Amazon Prime Video. Yeah, that's
They're
right.
in.
Did you guys see the women's gymnastic beam stuff last night?
I know. I heard. I did not see.
Okay, I got it. Okay, you heard about it. They all fell.
They all fell. Right.
Dude, somebody's greasing the beam. Listen, I have a conspiracy theory. What are you laughing at? We do a morning show about the stock market on YouTube. This is the land of conspiracy. So people are going to like this. Somebody came out, greased the beam, right? And then he went and loaded up on prop bets that they would fall. They all fell. These are the best gymnasts in the world. Everyone falls on the beam. How did that happen?
I don't know. Maybe because it's
The
hard.
guy that bet that there would be like a streaker on the Super Bowl, and he streaked in the Super Bowl. That's good. That's good. I like that. He made like $350,000.
I'm telling you, these things happen. It's possible. Somebody greased the beam, a little baby oil, juiced it up. Everybody's slipping all over the place. I felt bad for some.
It's possible. Justin, do you want to do hot corners or anything in there today?
There's a lot. There's a lot of stuff. There's a lot of buying the dip.
All right, let's do it.
The dip.
So hot right now.
Yeah, somebody definitely greased the beam. Rig, look, Frederick Wilhelm Mohn, 10.5 million. He's from some investment company. I believe he's on the board or has a seat or has a presence, whatever. 10.5 million out here. Energy stocks don't look terrible. Rig, there's a big level there. We do have the chart if you want to throw it up. Yeah, big level there. Look, energy's not getting, smacked in the face like some other things, but it also doesn't look good. It's just still rangy, holding range. Some have broken out.
How are we not selling naked puts on these industrials, bro?
Dude, Deere. I was looking at the Deere. I can't sell naked puts right now, but Deere, woo, chart looks good. This one looks good too. You have clean levels in a lot of charts. If you want to just throw it back to the table, just want to make a more general point. This is what happens, right? This is when insiders buy. This is when the big money comes out and buys. Usually our table has 3, 4, 5 filings a day. We're only focusing and counting material filings, right? We're going through, there's a long list, there's hundreds of filings. We pick out 3, 4, 5 most important ones. But on a day like yesterday, when the market's having its worst day, in 2 years, that's when the insiders, that's when the executives are coming out.
These insiders were YOLOing yesterday, bro. Look at this list, dude.
A number of big ones. Red Rock Resort stands out. CEO just came out and bought 10.5 million. Like, that's a big buy. Mobileye, we were just talking about how terrible this company is. Can't be that bad. The CEO and president wants to dump $10.5 million into it in the open market. These control empresarial people just keep buying oil and gas names. That stood out, but that's not new. That wasn't just like a yesterday thing. That's been going on for a month. CDW was a big one, 500,000. ATEC was a big one. We had the CEO and CFO come out in CDW. That's something that stands out. So just a lot of big purchases on here. Merchants Bank Corp, one of my favorite names in regional banking, absolutely taken to the woodshed after literally a historic rally, up 15 straight sessions, 3 straight weeks. The stock did not go down. Then it gave back literally everything. So it's encouraging to see the CEO come out and buy some stock in the open market. This one's really clean too. You can look at it at the lower bounds of its range. I think it's quite actionable right here at 39. So a lot of good stuff on today's list. We'll have a good call tomorrow talking about all this.
I'm trying to remember who it was. I don't know. Maybe Jack can help me out. There was a CEO that came out a couple of weeks ago, probably for earnings, and they were talking. It was an oil and gas CEO, but it was a specific industry group within that, and they were talking about how the macro environment has literally never been better for them, and it will continue to be perfect. And I want to say it was like a shipper, but I can't remember exactly who it was. It wasn't like Rig is what reminded me of this, right? But it wasn't Rig. I don't remember who.
I don't know what you're talking about.
I don't know. Never mind. I'll look it up later. Hey guys, the Hot Corner, if you don't get it, is a free daily note. It goes out every single day at like 8:00 in the morning. It's got all the biggest insider buys from Wall Street, Congress, to executives. QR code on the screen, link in the description. Get it free. It's every day, at least every day that there are filings, which, let's be honest, is pretty much every day, and it's awesome. So can't recommend it enough.
These industrials and materials in this box never broke down. No oversold conditions. Man, those things are looking beefy, bro.
I think a resolution is near, though, because this is just textbook. If you look at XLI, I wish we had the chart. You overshoot the range. You overshoot the range a couple weeks ago, right? You get a failed breakout, false start. Then you overshoot to the downside yesterday, right? And you got a little spindle that basically hit its lowest level since February. And now back in the range. Basically, it's getting volatile at the end of the range here. This is like apex stuff. So I think a resolution's coming. What direction it's in, hard to say at this point. It's hard to say.
I don't think it's that hard. I think you as Strazza would say, you in the direction of the underlying trend, which is the right thing to do. It's the right thing. Industrials have been a leader, not just large cap industrials, but small cap industrials. Why do you think these European countries keep making new all-time highs? Ain't because of the tech.
Are they still making new all-time highs? Have you looked at the German DAX in some of these groups right now? They're getting sold just like everything else, my friend.
All right. Well, they just closed a new all-time highs like a second ago, so let them dance.
Does look
Spencer? Why don't you hit it? I got to go to one.
Well, you kind of did your recess already at this. No,
but I want to show a pick.
We both did. We have more. We have more. There's more.
I just want to brag about my $31.
You know who JC is? JC is the kid at show and tell who wanted to show twice. Everybody else gets to show once.
Yes,
JC gets to show twice.
Yeah.
Come on. This is legendary. $31. Fourth row. Come on.
Is that the guy from the Counting Crows?
Nobody looks a lot like him. Right?
Yeah. He's cool.
Yeah. No, he was a little darker than that guy, but yeah, same hair. And then the creepy guy on the keys. I wouldn't let my kids anywhere near that guy, but very talented. Very talented. But Slash, man, unbelievable, dude. $31. Come on, man.
Is he like his own thing now? Or he used to be in the Velvet Revolver for a while with Scott whatever from STP?
He's got like four bands.
Right. Okay. So but this is just him and his boys?
He's touring with a blues band.
Got it. Cool. That's neat. Wow.
And by the way, there were 3 opening acts before. They were all great. It was fantastic.
What?
If you like guitar, you like blues, it was sick. I told Spencer to come. He didn't come.
I had plans Saturday. I never have plans, and I have plans this week. So
it's fun.
No, it's just I had to go. I went to Hibachi last night. You guys, I've been Hibachi in like 10 years.
Sorry to hear that, Spencer. I saw Slash, fourth row, $31.
No, that's a good picture. I'm sure it was a good show. I'm sure I missed it. I would have come otherwise. But,
amazing.
Strazza, you got anything?
No, I just want update on the hurricane that never was again this weekend. So
usually isn't.
You guys should have seen the Florida people down here. I was shocked. Like we look forward to it when we get a rainy day. It's unusual, so we'll like watch movies and eat soup and shit. Pretend like we're sick and stay inside. The amount of people playing golf, because I could see every golf cart that drives by. I see the amount of people playing golf on Saturday would have blown your mind, dude. They're out there in the wind. It was spotty with a little rain. They were golfing all day. Me and my buddies were just dying laughing about it. But they don't stop. It's really the Florida spirit through hurricane season.
Was this Debbie? Is that what you're talking about?
No, it was her. Yeah, Debbie.
Yeah, Debbie's what Kenny is about to drive into.
Yeah, it was nothing burger down here.
All right.
It's amateur
It
hour.
ended up being like a tropical storm. It wasn't even a hurricane.
Yeah, are you kidding me? It's not even a hurricane. It's
The
weak.
people on
No, it's not a hurricane. That doesn't make it bad
Weak sauce, Spencer.
or not bad.
Weak
It doesn't make it
sauce.
not bad.
the weather people lie about it. They're just like business news. They're looking for the clicks and the views. It's terrible.
Definitely,
Not wrong.
that's
He's
that's
not
a
wrong.
problem.
It's
That's a
ridiculous.
problem.
And then they were telling us like the other day, oh, it's coming back around. It's like, let it go.
The sensationalism there. By the way, do you guys know who owns the Weather Channel?
Probably CNBC.
No, not even close. IBM.
Stop it.
Swear to God.
IBM owns the Weather
Swear to
Channel?
God.
Wow. Fun fact, Spencer. Fun
Yeah.
fact.
That is weird, right?
Yeah. All right. My recess, I don't even have a recess, but over the weekend I ate like a college student. Strazza, you'll like this. JC didn't appreciate it, but I ate White Castle and Domino's in the same weekend.
Yes. I haven't had White Castle in so long. Good for you. I hope you
It's
had
like an every 2-year thing for me. And objectively it tastes not good,
No.
but sometimes you just
Can't eat that shit sober, man.
Yeah, you can. I do it all the time.
you can. It's a little bit more difficult, but you can.
You can do it.
So back in college, we used to, because we didn't have a White Castle in Connecticut because Connecticut is weird. People talk about Florida's weird. Connecticut's weird.
Yeah.
So we would play Madden, and whoever lost would have to drive to the Bronx to go pick up crave cases for
Yes.
everybody.
That's so
They
good.
still have the crave
Great
cases, which is like the suitcase with all the little burgers.
I would imagine.
Do they still have
You
that?
see it looks like a
And
donut.
we'd play. We'd have a Madden tournament, and whoever came in last, like a 4-person tournament, whoever came in last had to drive to go get it.
Dude, I have a hard
That's
time.
how much time we had on our hands.
I have a hard time driving by White Castle on the way home from dinner. Okay, is that good? Is that good? It's just awesome.
I have to make a correction.
Mhm.
IBM just sold the Weather Channel to private equity.
God, Spencer.
IBM owned it for like 8 years, and they
I wish
sold
you
it
didn't tell me
this
that.
year.
I
They
like- I
sold it
wish
this year.
I wish I went to sleep tonight thinking that IBM still owned the Weather Channel.
Sorry, guys.
Speaking of channels, you notice how they're not doing the markets in turmoil anymore? They took that data from us. Did you guys notice that?
Yeah.
Yeah. Anybody? Nothing.
All right. It's Tuesday. We got the spaces on the Twitter at 11. We got the chart request live. Strazza and Pat at 1 o'clock. Right here on the YouTube.
Fonz. People want more Fonz.
Oh, gonna be fun.
Yep.
All right. Thanks to Todd. Thanks to Kenny. Thanks to all you guys for hanging out. We appreciate it. Smash the like, please. Thank you. Check out all the links in the description. Get the hot corner for free. Get the chart report for free. Get our breakout multipliers. The very first link. It's all there for your convenience. We'll see you guys later.
Turn around
Adios.
Tuesday. Let's see it.